Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Hormaz Fatakia. It's a day of consolidation for sure. This is ahead of the big Fed meet outcome we're expecting tomorrow. The Nifty definitely has recovered from the lows and it's up around 60 points from the lows of the day, up 25 points right now. Bank Nifty continues to be higher as well. Though these are flattish moves that we are seeing right now, but nothing to complain because this is something which was expected. We had mixed handover coming in both from the Asian markets and the US markets as well. So markets maybe could continue to be very volatile and consolidate at these levels ahead of that outcome tomorrow.
We should not be surprised, right? Because it's been the trend,
Yes.
It's been since that last week, barring that 190-minute dash that we saw on Thursday afternoon.
That was unreal.
So it's only par for the course, right, that the market is stuck in a range, and that is what is the Nifty right now, but still continuing to hold above that mark of 25,400. It'll be interesting to see. It's the financial services expiry today, so it's the Nifty Bank that will be in question. Now trading above levels of 52,200 is the Nifty Bank, now almost up 1,200 points in the last 3 trading sessions and today counting. So almost there. So very stellar move seen on the Nifty Bank. It's been an outperformer over the last 4 trading sessions.
But you know, surprisingly, despite all this, HDFC Bank is not contributing so much to the Nifty Bank gains that we are seeing right now. And in the month of August, we saw massive selling coming in from mutual funds only in the HDFC Bank stock, close to 8,300 crore rupees. HDFC Bank, the stock down 2% year to date, while Nifty is up 16%. So that just shows what's happening beneath the surface when it comes to Nifty Bank.
That despite the heavyweights that the index has moved, right? So it shows the kind of market that we have had. But the broader markets today, yes, they are feeling some bit of pressure after some outperformance in the recent past. The small cap index is down 0.5%. The mid cap index trading below the flat line today, but pressure coming in on the PSU banks as well after a couple of days of a revival that was seen by these PSU banks. So all in all, right now, there is no reason to complain. We are waiting for a big event in the market. But we'll begin the show with a corporate conversation, and that is Sonata Software, and that recently completed the merger of Encore Software with Sonata Software North America. And just last month, it had won a large multi-year strategic IT outsourcing deal from US-based premier healthcare and wellness company. To discuss this and more, we are joined by Jagannathan Chakravarti, the CFO at Sonata Software, to talk more about the prospects going ahead. Mr. Chakravarti, good morning. Thank you so much for joining in. I'd like to talk to you first about the deal that you had won last month. Could you tell us more about that, this multi-year, multi-million-dollar deal that you have won? What does that do to the company now when it comes to the financials? How does it benefit you? Is it EPS accretive? Tell us more on that.
Yep. Good morning, all. Thanks for this opportunity. This was the deal what we have announced during the earnings call. We have mentioned about the healthcare deal which we won towards the end of June. This is the same deal because we were waiting for customer approval and they have announced it when customer approval has been received. This is the healthcare deal. This is like the second largest deal for Sonata. However, we have also mentioned that the deal requires some investments in AI and the investment in the transition of this deal. So the initial stages, the first 3 quarters will be margin dilutive. We will have because of the on-site we have the rebadge people in on-site, hence there is an on-site investment that will actually depress the margin to some extent. And also we are going to have an AI platform investment which will be built by us and then transferred to the customer over a period of the deal. These again requires an investment in the initial stage. After the first phase of transition over, after 3 quarters, we are expecting the margins to improve from the deal. Overall, the deal is definitely accretive to our margin. It is equal to our company margin, what we average margin we maintain. The deal is for 7 years, and this deal is a breakthrough for Sonata Software.
Could you quantify those investments, Mr. Chakravarti? You mentioned that this deal would require some investments, right? Could you quantify them for us?
No, not exactly. I couldn't quantify because this is customer confidentiality are there. However, this is the first time we are integrating an AI deal along with this. This is a major investment in helping the customers run their operations using an AI platform. We have our own platform, Harmony.ai, that is going to we are going to customize that for the customer requirements and going to launch it along with the project to the customer.
Okay. Mr. Chakravarti, I just wanted to confirm. So in Q2, companies won 3 large deals. This deal is a part of it, right?
Yes. This deal is part of that. Q1, we have 3 large deals. This is one of that. Correct.
Okay, okay. So it's in Q1 that you won this deal.
Yes,
Okay, so
exactly.
what is the what has been the deal win so far in Q2? Has it been better than Q1? What are the trends indicating? I know you cannot give a number to this, but just a sense qualitatively, and if you can give a number, that will be great as well, Mr. Chakravarti.
No, we will give the number during the quarter end. Quarter close is over, but the pipeline has been very, very strong for us. We have been mentioning that. Interestingly, there is a delay in closing the large deals for us. We have been highlighting that there is an uncertainty and delay in closure of the large deal. However, the pipeline has been always very good. Okay, the situation as pipeline is very good, but the deal closure is taking time. Is surprising for many of us, because this has been very, very strong. And this quarter also will be a good quarter for us to close the deal. We are expecting the deal wins to be similar to what we had in Q1. But 1 quarter, 2 quarters down the line, we are expecting it to improve much, much better. This definitely is a changing environment. We are waiting for the other external environment to change. And with that change, we expect that market will be better for us in the coming quarters.
So you're saying, Mr. Chakravarti, that the deal closures that according to you is still taking time, would that improve a couple of quarters down the line, if I'm getting that correct?
Yes, exactly. That is our expectation, because the three factors are playing around: the political factor of US election, the Fed interest rate, the economic factor, and also the technology cycle, where customer is having a wait and watch for the entire AI cycle to evolve for the customer. But at least two factors, we expect that in Q3, Q4 it will be better. So with this, we expect that the deal closure will be better, and Q4 of this year, we expect the momentum to be better than what it is at present.
Okay. Mr. Chakravarti, can you give us a sense of how much is healthcare contributing to your revenues right now? What is it growing at? And BFSI, you mentioned US elections being one of the major factor going ahead. What is the US BFS looking like? In Q2, has it picked up?
Healthcare is at present around 16% for us. We were at 3% earlier, and we have been improving. The healthcare is doing well now. In fact, there is a strong bounce back in healthcare. And the BFS sector, we are definitely seeing a green shoot, particularly the consumer banking side of it. Definitely, there are some new opportunities coming in, and a lot of discussions on opportunities are happening. And we expect the BFS will bounce back in Q3 or Q4 of this year. We see definitely a momentum. I'm not saying insurance vertical. Insurance is smaller for us, but BFS definitely has a clear signal of green shoots indicating recovery from the BFS sector soon.
Seeing green shoots, Mr. Chakravarti. You're seeing green shoots, Mr. Chakravarti, but is that translating into deal wins, sir, within the BFS segment? Do you see a pickup in that in the second half? And also couple that up with your fact that are you on track to achieve that $1.5 billion target that you had for FY26?
No, we have already announced that FY26 it may be difficult for us. So because of the slowdown in the market, we said we'll achieve by FY27. We have already told that last quarter. The BFS sector, we are expecting it to recover back by Q4 of this year. It will be better is what we look into. Healthcare is doing well. The TMT vertical is also actually doing well. Our largest customer is doing well. The only sector where we see very, very strong softness is the retail. Retail and manufacturing, there is softness. Other verticals are slowly improving. If BFS improves, the momentum of growth for us will be better.
Okay, so that continues to remain the point to focus on and track very closely. Mr. Chakravarti, last question before we let you go of this interesting conversation. We spoke extensively about AI pipeline the last time. It was around $60 to $65 million. What does it stand at? Have you seen an improvement there?
Yes, we are seeing a lot of improvement in the AI pipeline. What has happened now is, even if it is a 100K deal, customer wants an AI there. Without AI or Gen AI in a deal, no proposal goes now. Nothing of that. So at present, everybody wanted to explore in the AI deals in all the places where they wanted. But when it comes to a large deal, customer has to wait and watch. They wanted to see whether this is the technology, this is the final technology, this is the change technology, what is. Because every day there is a change happening in this technology space. So there is some wait and watch from customer side when it comes to a large deal. But we expect this is going to drive the growth for the IT sector in the next couple of years. And definitely the momentum will be better in the coming days. The pipeline is very strong and it is growing every year. Every quarter on quarter, it's growing very well.
Very quickly, Mr. Chakravarti, one final question. With Encore now complete, are you eyeing more acquisitions with the cash that you have on the books?
We are always open for acquisitions, and we've been very clear that we are open for the acquisition. But we are not going to do anything for the sake of size. That is not our cup of tea. We are very clear unless it is a strategically fitting acquisition, we will not do it. At present, we are not very keen on that. We are waiting maybe the end of the year or next year. We will probably consider an acquisition. But we are open for an acquisition which is strategically fitting into our requirements.
Okay, all right. The street seems to like what you're saying, Mr. Chakravarti. The stock is surged to the day's high. Thank you so much for joining in with all those details and what the plans are going forward for Sonata Software. That's the word coming in from the company about the deal wins and different sectoral outlook as well. We'll slip into a break. Up next, we'll discuss what's buzzing in commodities space with Manisha Gupta. Stay tuned for that.
Welcome back. You're watching Trading Hour here on CNBC-TV18, and time to get you an update on what is happening in the commodity space. And Manisha Gupta now joins us with all of that. Manisha, good morning. Metals have kept you busy, and so has crude oil. What's happening in the commodities right now?
Well, two things. One, the strength in the weakness in US dollar index, and two, the US Fed meeting. Well, all eyes onto that one, and that's keeping the markets uncertain, jittery. But one thing is for sure, nobody wants to get into this meeting with their positions short. So you have seen a lot of buying actually happen in case of commodities. When it comes to metals, well, copper is trading at around 8-week highs. We've seen prices continue to gain up. The prices actually are up by nearly 5% when you look at the last 1 month itself. Zinc is trading at a 3-week highs, rather 9-week highs. Aluminum and tin are trading at a 3-week highs. Aluminum, LME inventories have continued to decline. They're at an 18-week lows, is the reason that you've seen a 3% of a surge come in the overnight markets as well. But as said, it's not just metals. You have the energy pack as well rebounding quite smartly from almost 69 kind of levels in the previous week. We are back above $73 a barrel in case of Brent prices there. The WTI crude price is also back above 70 right now. Nearly 20% of Gulf of Mexico at this point in time has seen production go offline. This is after effects of the Hurricane Francine that has been supportive. And then Libya exports also have declined because of the stalled UN conversations there. The markets have seen demand growth numbers for the year 2025 also come in now between 1 to 1.7 million barrels per day. And that in turn also have led to some opportunity buying in crude as it is.
Okay, so that's what's happening with crude oil prices. Thank you, Manisha, for joining us as always and getting us up to speed with what's happening in the commodity space. It's time to slip into another break. When we come back, we'll discuss market technicals with Mes Tucker. We'll also discuss the top trading bets. Stay tuned. Welcome back. You're still tuned in to Trading Hour. While we're seeing a lot of consolidation in the indices, a lot of stock-specific action that's happening. Ola Electric shares, they are surging higher after a slew of positive brokerage notes. Vinny is joining us now with all the details. Vinny, always bullish on this names, a lot of brokerages now.
Yeah, absolutely. A lot of brokerages are bullish. Today we have two brokerage notes. One is from BofA, other one is from Goldman Sachs. Let's start with BofA. They are initiating coverage with a buy call, target price of 145 rupees per share. Obviously, Ola Electric is the largest electric two-wheeler company in India. A share of around 40% is what BofA is highlighting. Plus, in terms of price points, that's also interesting because now e-scooters are being priced at a price below the petrol scooter. So obviously, that will start improving the market in the electric two-vehicle space. Other than that, the forecast that BofA has given for Ola Electric, they're saying that they're expecting the penetration over for this segment to start increasing 18% by FY28, 25% by FY30. So quite positive on this one. Goldman Sachs too was highlighting about how, the company is quite positively structured and positively levered to benefit from the long-term growth story for the electric two-vehicle space, as well as for FY24 to FY20 CAGR growth of around 30%, 40%, I beg your pardon, is what they're expecting from Ola Electric, plus a lot of levers that they believe will work out well for Ola Electric. The entry that comes into three-vehicle space in the current year 2025, that is a positive, as well as two-wheelers, which is growing at a fast pace, plus the valuation seem quite well versus other two-wheeler players in India is interesting to watch out for.
Not one but two thumbs up for Ola Electric. Vinny, thanks a lot for that. It's showing up in the stock price as well. 5.5% higher now for Ola Electric. Now 113 on the stock. But we must mention that before today's move, the stock was down almost 30% from its peak, which was around 157 as well. Is Ola Electric on your screen, 5.5% higher. But the other two stocks that are doing well in today's session are IGL and MGL, and that comes on the back of an upgrade from a bullish commentary coming in from UBS, Sonal.
Oh yes, it's a big update that we have seen, upgrade in both these names, and it's a big target price hike as well. You can see that in the stock moves today as well. So they've upgraded IGL to a buy from a sell. They've increased the target price to 700 from 400 rupees per share earlier, and they talk about the inorganic opportunities that the company could look at and something that would complement their near-term fundamentals. They expect volumes to improve by 8.2% CAGR in FY24 to FY27 versus just the 4% growth that the company has seen so far. The infrastructure expansion and new geographies that they're expanding into outside the NCR region is something that is making UBS bullish, and they say potential M&A opportunities are still not priced into the stock as well. For MGL, they have a buy rating already. They have increased the target price massively to 2,400 versus 1,600 earlier. For them as well, they talk about the inorganic and organic opportunities for volume growth going forward. They've raised the volume expectations by 7 to 11%, and they also talk about EBITDA per SCM improving because they've been taking price hikes, or basically their margins are under control. So 6 to 11% could be the improvement in EBITDA per unit for the company. Again, for them, potential M&A opportunities are not priced in. Remember, they had made an acquisition last year. They expect that to continue to kick in, and also more opportunities for both these names.
Stepping on the gas are both of them, IGL and MGL. Good going for both of them. Positive commentary coming in for UBS. But primary market rush continues on Dalal Street, and the new kid on the block that is listed today, PN Gadgil Jewelers, that saw a very strong listing as well today. 73% premium to its issue price, still trading with gains of around 67% from those levels. Mangalam is now joining in to tell us more about the company. Mangalam.
Well, indeed, another day, another stellar listing, and this one belongs to PN Gadgil. Was offered at around 480 rupees, listed at a 73% premium to that, still holding above those levels itself. And it was a bumper listing which was expected already. I'll tell you 4 reasons why. The most important reason was there was strong demand for this issue. Overall subscription was close to 59 times, led by QIBs, which were close to around 136 times. HNIs as well asked for around 59 times the offer that was made itself. And from the time the IPO was made to now, in the interim, there was a big surge in gold prices as well. So gold continues to be at record highs ahead of the FOMC outcome. That did well. What also did well was a big rally which was underway in a lot of these small jewelry companies, smaller ones in particular. TBZ, for instance, 62% higher this month. Moti Sons up 48%, PCJ up 32% as well. And finally, it was offered at around 42 times. But after this bumper listing, is currently trading at 70 times trailing price to earnings. What's important is that the company is going forward, growth will come by from store expansion. They expect margin improvement to come by through increased studded ratio. And in the very near future, increased gold prices would, cause a big inventory gain there, because the management did tell us that unhedged gold is at 65% of their portfolio. Even though they will reduce it to 20% over the next 6 to 8 months, this proportion will see some gains because of the rally that we've seen in gold prices itself. And during the IPO, they had told us about their long-term targets as well. 10,000 crore revenue by FY27 with double-digit margins, reaching around 60 stores, and also studded share increasing from 10% to 15%. So those are a couple of factors that we need to keep an eye out on. And over the next couple of years, they're also looking at 120 stores over the next 6 years. So those will be a bunch of growth drivers. Stellar listing, but valuations which were attractive when offered are now elevated at 70 times trading earnings.
That's been the case for most of the IPOs which have done well, right? Thank you so much, Mangnam, for joining us with all those details. That's PN Gill for you, up around 67% as we speak. By the way, while we talk about new IPOs, the market has also picked up. So it's 50 point higher on the Nifty right now. When we started the show, it was up around 25 points. So yes, there is some movement that we're seeing on the upside, and we'll track that very closely. Mes Tucker is joining us for a quick technical check on the markets. Mes, good morning. Thank you so much for joining in. Well, what are the trends suggesting? Some consolidation today, or do you think we'll see a rush towards maybe the later part of the trading day?
Good morning. My sense is that it could be the Bank Nifty which could possibly, be more active as we head towards the later part of the trading day. And I'm looking at a target of around 52,500, 600 to be tested immediately. So that's the idea. In fact, on the stock side, I also have a buy on Kotak Bank, which I would recommend buying with a stop below 1825 for targets of around 1900. And also buy on NGL with a disclaimer that I have some call options positions over here. It's given a breakout into fresh highs. So MGL is a buy with a stop at about 1875 for targets of 2040.
But do you think, Mitesh, that the strength in the Nifty Bank would be enough to push the Nifty towards levels of, say, 24,600 or maybe 25,800 as well in the near term?
Almost, it will definitely help the Nifty go higher. Plus, is the fact that the technology stocks like Tech Mahindra, etc., are making new highs. So, I do expect 25, 650, 700 in the near term could be tested. Though there is good call options, so open interest at the 25, 500 mark, and that's been the first target for us. But I think it might, if not today, by tomorrow, I think there is a chance that we might actually try and attempt to get past 25, 500, and then head towards 25, 650, 700.
Okay, all right, Mitesh, your picks for the day?
I think I covered them, Kotak Bank as well as MGL.
Okay, sorry, all right. Okay, I missed that. Thank you, Mitesh, for joining us and giving us all those details. But as we slip into a short break, here is some good news for your viewers. India's business news leader is now click away, introducing CNBC-TV18's all-new Android app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 Android app now from the Google Play Store.
Back with us here on Trading Hour. Now, while speaking at a News 18 India event, the Finance Minister Nirmala Sitharaman spoke about the IPO and F&O frenzy on Dalal Street. She said that there is nothing wrong in investing in the F&O space, but also added that one must be cautious and trust only authentic information. Now, she's also not worried about the GDP growth slowing in the first quarter and expects an acceleration in the quarters ahead.
We'll have to encourage the markets to be robust, no doubt. But particularly when speculative activities are too much, there needs to have a sense of caution in our minds. We need to have it. And we also need to make sure that people with their savings don't go to engage in high fluctuating or high risk ventures. No harm in participating in F&O, or no harm in going and investing in the equity market. But eventually, we need to be using financial information, authentic information, before we take a call. The capital expenditure which was announced, 11 lakh crores, slightly over it, didn't find much of an expenditure happening in the quarter one because every department was probably looking at post-election time. As a result, the large chunk of influence or impact which could have been had because of the public expenditure was muted. That's right. And therefore, to that extent, it shows in the quarter one numbers. But subsequently, quarter two and quarter coming, we are in the third quarter, the expenditure will pick up, and that will, I suppose, trigger the little slowing down that you suspect to move faster.
India remains one of the fastest growing economies of the world. Given right now that, there is some soft GDP growth and the inflation is also moderate, do you think there is a case for monetary easing? I'm asking for your view.
Yes, my view being said here will become, Finance Minister expects RBI to bring it down. I don't want to add to that. RBI is doing its full analysis and taking a call. and therefore I expect them to look at the economy as a whole, both for growth and for inflation.
Okay, very interesting and very important comments coming in from the Finance Minister. Of course, we'll keep getting you excerpts of that exclusive conversation through the course of the day. For now, we'll slip into a break. Up next, we'll discuss market fundamentals with Pawan Parekh from Geojit Financial. Stay tuned. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, some source-based news right now flashing at the bottom of your screen. Atishi Marlena will be named as new Chief Minister of Delhi government. Of course, this is still source-based news. We need confirmation on that. But that is an important update coming in, and we'll keep getting you more details on this once it is finalized. Let's move on and talk about market fundamentals now. Pawan Parekh, the fund manager at Geojit Financial Services, is joining us now to discuss market fundamentals and the top sectoral bets. Pawan, good morning. Thank you so much for joining in. Well, for the Beacon fund that you manage, I was looking at the breakup where the large caps are around 34%, mid caps 28%, and small caps are 33% of the overall fund, and cash holding is around 5%. So large caps are equal to the holding that we are seeing in small caps. Are you seeing equal comfort in both the segments? What about valuation, especially in small caps, after the stellar rally that we have seen, and large caps now that the August close that we saw a stellar comeback?
Yeah, hi. So basically, let me put things in perspective first. So this large cap, mid cap, small cap classification is as per ANFI definition. So if you own something like 70,000 crore market cap today, even then
Okay, looks like there is some error. We will just try and fix that issue when it comes to the video. But let's talk about the Nifty right now, because it has come off from the highs again. At a point in time, we were up around 50 points. Now we are up 28 again. So there is a fall from the highs yet again. Couple of these stocks in the broader markets that we should talk about. Neogen Chemicals, that stock is up around 9% right now. There's been a definite comeback in some of these chemical names. We have something like a Sudarshan Chemicals, which is up around 4.5%. Neogen is actually now up 12.5%. So some of these chemical names making a comeback. We have Sudarshan Chemicals, which is hard in trade right now as well. And there's Aarti Surfactants. That's the second day running that the stock has done really well. So in the broader markets, while we're talking about the mid-cap index, yes, it has seen a recovery. It is still underperforming the benchmarks right now. In the broader markets, there are a lot of stock-specific moves we are seeing, and big volumes as well.
Big volumes indeed. And you spoke of Neogen Chemicals. As Avendus Spark has come out with a note with initiating coverage on the stock, a price target of 3,600 in the next 12 months. That is double from current levels. I guess we have Pawan back on the line. Pawan, you were speaking about your allocation towards small caps and the larger cap stocks. Please go ahead with that.
Yeah, sorry for that. But yeah, so the point I was trying to mention is that all the large cap, mid cap, small cap allocation that is being seen in the fact sheet is all as per ANFI definition. So if you own something like 80,000 crore market cap company in your portfolio, technically it's a mid cap. But you know, something which is $10 billion in market cap, I would want to believe it's a very large company. So if you look into the portfolio from that perspective, you would find that maybe about 70% of the portfolio is into companies with more than $3 billion market cap. And if you actually look at the bottom side of the portfolio, say companies with less than 10,000 crore market cap, we just have 2 or 3 of them. So it's a portfolio of large cap and large mid cap companies.
Indeed. Pawan, I wanted to speak to you within specific sectors. I wanted to talk to you about housing finance companies, because they are the ones in trend as of now over the last couple of trading sessions, especially after that listing of Bajaj Housing. You believe that Bajaj Housing, now being the largest player as a standalone housing finance company, would that continue to command that premium valuation that that earlier HDFC used to command at one point of time? And what about the other peer companies as well? What does that do to their prospects?
I think housing finance is one space wherein, you've got companies at 1.5 times price to book also, and companies at 4 times price to book also. So in terms of valuation, this is not a homogeneous sector in that sense. Having said that, I must also tell you one thing, that we are in a kind of a bull market wherein popular sectors tend to get overrated. Housing finance is somewhat in that sense, and obviously Bajaj Housing Finance commands the premium valuation of the Bajaj Group also. So considering all of that, I would want to believe that, within the housing finance sector, there are perhaps better names in the sector which provide decent comfort in terms of growth and valuations. And Bajaj Housing Finance kind of commands a lot of premium valuations, which doesn't give a lot of comfort to me at least.
What are some of the sectors you're bullish on now? Something where you do see some value and you think there can be opportunities available?
I think one sector very clearly over the last 2-3 months you started getting overweight is in the consumer discretionary side and the entire consumer pack per se. I think this is one sector which is extremely beaten down. We all know consumer demand has been very, very, very muted for last 1 or 2 years. But now we are seeing some green shoots. While we say we are seeing green shoots, it's not a runaway growth story that we are seeing in the sector, but a gradual recovery. As and when that gradual recovery plays out, I would want to believe that a lot of these sectors, a lot of these stocks within this sector, which haven't done well over the last 2 years, will start making a comeback. And within this sector, I think one thing which is actually coming up very nicely is the premiumization story. Right, premiumization in everything within the staples category, we are seeing some sort of premiumization happening there as well. So I think that premiumization story is something that we like really well, and we are playing those stories across apparels, personal care, and a lot of categories like that.
Pawan, I wanted to ask you about the renewable energy space as well, because I see your portfolio and it has some exposure to stocks like Inox Wind and Sterling and Wilson as well. Do you see that this space is likely to continue growing considering the emphasis that the government has been putting on it?
I think we've just seen the tip of the iceberg now. I think power, I think India has got a long history. Since 2008-9, we haven't invested into the power capacity in the country. And now if India has to do well, if manufacturing in India has to do well, digital India has to do well, or consumption story has to do well, power is one of the basic necessities that one has to have in place. And very clearly, at least for now, India will invest into thermal power. But I really doubt if thermal power has got a terminal growth to it. Right? But on the other hand, if you look in a country like India, which is compounding its GDP at 6.5 to 7%, power demand generally grows at about 1.2 to 1.5x. So take a 10-year view or 20-year view, power demand in the country will grow at about 10-12% at least. And if that is to continue, you would want to believe that renewables will have a 10 to 12% terminal growth. In that backdrop, I think, Inox Wind, which is in the wind sector, or Sterling Power, which is in the solar space, both of them provide very attractive opportunities for investors.
Okay, all right. So power sector remains in focus as well. A lot of exciting developments happening there. Pawan, thank you so much for joining in today with your picks, your outlook on the markets as well. Time for a short break now. A.S. Mehta from JK Paper will join us on the other side to discuss the business outlook and the way forward. Stay tuned. Welcome back. You're still tuned into Trading Hour. The stock on our radar now is JK Paper. In Q1, it was a weak set of numbers overall, but revenues from operations grew 8% on YOY basis, but EBITDA margin saw contraction. The company aims for a double-digit top-line growth for FY25. To discuss more on the performance and also on demand and pricing trends, we are now joined by A.S. Mehta, the President and Director at JK Paper. Mr. Mehta, thank you so much for joining in today. Q1 did see a lot of headwinds. We saw paper prices falling, raw material prices increasing. Has that trend reversed now in Q2? Can you give us a sense of what are the prices for packaging board as well as coated paper, copier paper, and at the same time, are raw material prices soothing off a little bit?
Thank you very much. In fact, the paper prices did not move. And different categories, there was a different trend. Yes, little bit in the packaging board, there was a minor upward movement in the packaging board prices, but is very, very inadequate, I must say. The other writing printing paper prices, in fact, the Maplitho paper prices have further come down. The copier is more or less the same. And the coated paper prices have also further come down. But only thing is that there is some reduction in the global pulp prices. So a minor saving on account of the pulp prices is there. But since mostly all the Indian paper companies are integrated player, so we don't get major advantage of pulp price reduction because we produce our own pulp. Of course, the raw material for our pulp production is the wood, and prices more or less remains the same. There's no reversal, I would say, but there's no increase also because current level also it is unaffordable. Very high raw material cost is already there. So, but there's no reduction, I must say. But the energy cost is for slightly remain, I would say, lower compared to what it was. So overall, this is the scenario.
Mr. Mehta, good morning. Thank you so much for joining in. I'd like to ask you about the volume trends that you have witnessed, because in the fourth quarter, your volumes were down around 2% sequentially. Even in the first quarter, they were down 1% on a sequential basis. What are the trends that you have witnessed so far? We are almost coming to the end of the second quarter. How has business looked like this time around? And since you spoke of prices being constant, do you expect that to remain at similar levels for the rest of the year, at least for the rest of the year as well?
See, I would say that the volume for packaging board, there is a decent growth in the packaging board volume. And this is also on the strength of the new year and festivals and everything coming in. So the packaging board demand is good. Copier demand is fairly stable. I would say shed better than what it was in Q1 because from July onwards, we see all the core school, colleges, and they start opening. But the Maplito, there is some lullness, and there's a normal because the Maplito and commercial printing, in fact, July to September is slightly a slower season, but thereafter it picks up. So we expect from October onwards, the demand for Maplito should be a good demand. And packaging board, I would say that till December, it should be good demand. And thereafter also, I would say that it will remain a decent demand period for the packaging board.
Okay. Mr. Mehta, you know the import intensity is very high today. So I just wanted to understand the pricing differential as well between the landed cost and the net selling realization or the NSR on different paper segments. Has that reduced now? Is that where there is some improvement for Indian players?
See, that is one factor, and again, it depends on the different category of a product. Let's talk about the first, the major volume of import is one is the coated paper. And the coated paper, I mean, in the past also, it has been at par with the landed cost of imported coated paper. Yes, domestic player, we get something around 3-4% of a premiumness because our delivery, our service to the customer, and being a local player, we can cater the need so fast. So that advantage we have. So 3-4% prices can be higher compared to the landed cost of imported paper. On the copier front, there was a surge of import in the month of August and September. So certainly that has also impacted the prices. Maplito, there is a surge in import. So that is also has, I mean, it is having a bearing on the local prices, and the drop in Maplito prices is predominantly, one is the lullness in the demand, and also top of it, there is a cheaper import or dumping by the players. Packaging board, there was some increase in the import of packaging board. That's again a dumping from China and Chile. So that's impact. So on that matter, we have already gone for an anti-dumping matter on the packaging board. I would say that in coming months also, it will have some bearing on the local prices, and we will have to keep watch on this.
Mr. Mehta, has there been any progress on this anti-dumping bit that you mentioned about this from China and Chile that you spoke of? And since you spoke of that prices likely to remain subdued, what does that do to your margins? Would you expect that to remain where they are currently, say around 23-24%? When do you see that going back to the earlier levels of around, say, 29-30%?
I would say that, see, the dumping petition, what we filed, I am hoping that the investigation will be faster now, because there is an intent of the government to have a faster speed of the investigation. So I think they have already started the investigation. It will take some time, and we will again go meet the safeguard people so that it can be fastened up. So this is on that part. See, when we talk about the margin, I would say that 30% margin, what we have seen, I mean, that's unusual. I would say that for paper industry, long-term average has been something around 21-22%. For a good player, and average industry 19-20%. So I would say that even if 22-23% margin is maintained, that's a decent margin, and it gives a healthy return on capital employed. So rest of the year, I don't foresee a major the surge in the margin. But even if we are able to maintain that margin of something around 22-23%, I would say that that's a good margin.
Okay, all right. We take that point. I had a lot more questions on Sirpur, the Ludhiana facility, but completely out of time on the show today, Mr. Mehta. But it was a pleasure getting you on the show and getting the intricate details of what's happening in the paper industry as well. But with that, it's a wrap on Trading Hour for today. But stay tuned. Halftime Report is up next with all the action.